Okay, so today we're going to talk about something huge happening right now in the GCC's financial world. Central banks are finally tackling one of the oldest and honestly most expensive problems in finance, how money moves across borders. And let me tell you, this isn't just some small tweak. This is a move that's set to fundamentally change the game for banks, for businesses, and for the entire fintech scene.
All right, here's how we're going to break this all down. First, we'll get into the core problem, what's called the liquidity trap. Then, we'll look at the cool new technology that's meant to solve it. We'll dive into a real-world project that actually proved this thing works, check out the impact on economic growth, and then wrap up by looking at what gets built next and why this whole thing gives the GCC a massive competitive edge. Okay, first up, let's really dig into the foundational challenge here. I mean, why are central banks in the region so laser-focused on this specific reform? Well, it all boils down to one thing: a massive, hidden cost. And that cost comes from something called trapped liquidity. Now, what is that? Well, imagine these giant pools of money that banks are forced to just park in special accounts all over the world, basically just waiting around for a transaction to happen. That capital, it's effectively frozen. It can't be invested, it can't be lent out, it can't be put to work. It is a huge, huge inefficiency baked right into the old way of doing things. So why does this even happen? It's because the old way of sending money internationally is frankly like a slow and super expensive relay race. Your money gets passed from one intermediary bank to another, and for this whole rickety system to work, each bank has to keep a bunch of money on hand in these special Nostro accounts. And that right there is where all that liquidity gets trapped, making the entire process just incredibly slow, complex, and, you guessed it, expensive. And look, this isn't just some abstract problem for big banks. It has a very real impact on the economy, especially in a place like the GCC. You've got massive trade volumes and an economy that's really powered by small and medium-sized businesses, SMEs, right? For them, a payment delay isn't just a minor hassle. No, it's a direct hit to their working capital. It literally throttles their ability to grow. So the big question is, how do you solve a problem this massive? The answer, as it turns out, isn't just a small tweak to the old system. You need a completely new technological foundation. And this slide just lays it out perfectly, the old way versus the new way. On one hand, the traditional system, it's slow, it's inefficient. But the new model, it's built on something called distributed ledger technology, or DLT. Think of it like a shared, super secure digital record book. And this tech, it makes settlement instant, it slashes costs, it allows for direct transfers, and this is the real magic, it frees up all of that trapped capital. Now, this is where it gets really interesting because this isn't just some theory on a whiteboard. Nope. Central banks in the region have already put this technology through its paces in a major pilot program to see if it could actually deliver on all these big promises. That test was called Project Aber, and it was a truly groundbreaking collaboration between the central banks of Saudi Arabia and the UAE. The goal was, simple on the surface, but incredibly ambitious. Could they create one single, shared digital currency running on a DLT network that commercial banks could use to pay each other directly? And the results? Well, they were a massive success. Project Aber proved that a shared digital currency isn't just possible, it's actually more resilient than the old centralized system. It allowed payments to settle instantly, directly between banks, and completely got rid of the need for those pesky, expensive Nostro accounts. A total win. Okay, so the technology is proven. It works. The big question now is, what does this actually mean for the real economy? Now that this new infrastructure is in place, what kind of growth and innovation is about to be unlocked? Well, for one thing, it's a massive shot in the arm for the fintech sector. I mean, just look at this chart. We're talking about projected growth for the UAE's fintech market alone, nearly doubling in just 5 years. Think about that. And let's be clear, that kind of explosive growth is only possible when you have secure, predictable, and super low-cost payment rails to build everything on. And the sheer scale of this market is just enormous. The value of regional payments across the whole GCC is expected to hit $9 billion this year. $9 billion. When you reduce friction in a market that big, you create absolutely incredible opportunities for brand new businesses and services to pop up. And this brings us right back to the SMEs, the small and medium-sized businesses, who you could argue are the biggest winners in all of this. For a small business owner, getting paid instantly versus waiting days or even weeks, well, it's a complete and total game changer. It means better cash flow, plain and simple.
It lets them pay their own suppliers faster, take on more orders, and just scale their whole operation way more effectively. But you have to remember, this new instant settlement layer, it's really just the foundation. Think of it like building a brand new highway system. The highway itself is great, but the real value, that comes from all the new businesses and services that can suddenly operate on top of it. This new infrastructure really does unlock a whole new universe of financial applications. Just think about it. You could have smart contracts that automatically handle complex trade deals, or new decentralized tools that help companies manage their cash and liquidity. It can create more transparent supply chains, and it even stretches into capital markets, making things like the instant settlement of bonds a reality. All right, so when you put it all together, what does it all add up to? How does a reform like this translate into a real, tangible competitive advantage for the GCC on the global stage? This quote really nails it. By shifting away from that old model of trapped liquidity and moving to instant settlement, the region has basically built a fundamentally better operating system for its entire financial industry. It's not just about being faster or cheaper, it's about creating a platform for a whole new wave of innovation. So the big takeaway here is pretty clear, right? The central banks have done the heavy lifting. They've laid the groundwork, they've proven the tech works. Now the ball is officially in the private sector's court. It's up to them to build the next generation of financial services on top of this truly world-class infrastructure. And that leaves us with one final, really exciting question to think about. The foundational rails for a completely new financial era have been laid. The only question that remains is, what's going to be built on top of them?